Hello everyone, hope you're doing well. Welcome to another hopefully quick Monday Markets video brought to you by the FTX app as ever. First and foremost, thank you for your support on the channel. It's been great. We're almost at 40k subs. Let's push over the line. Do share this with your friends, leave a like, subscribe. It sounds mundane, but it does make a difference and we're grateful for all of your support. Now, we're coming up to the monthly close, 1 day and 8 hours left, and it doesn't look terribly promising unless next month is very bullish. So at face value, as ever, if you recall, we're working with the same higher time frame monthly range levels. I do think this has been the best performing and clearest and least choppy time frame out of all the higher time frame ones, and I see no reason to move away from it. As before, we've got support 35.37, resistance 57.58, and the mid-range or the mean at 43 to 47. Now at face value, if this monthly closes in this type of area, it looks like a monthly range breakdown and the breakdown of a year-long range, and that's bearish, right? In terms of targets, should the breakdown continue, as I've said before, the 200-week moving average is a decent bounce spot, and that comes in at around 20k, and there's also then monthly support. Also, that's the prior all-time high there, but we're going to cover it under the 200-week. And then there's the area of previous structure, monthly support in the form of 14k. Now, you might think it's very unreasonable to have both of those as levels given the big discrepancy between them, but I'll bring your attention to even the March crash test of the 200-week moving average, which looks like a very neat kind of, close above and then moon and then looks very tight here as well. If we look back to the size of the move through the 200-week moving average the last time it was tested, I think that's more or less like a 30% move. So can you imagine buying a level where you think the market's going to bottom, and then you have to take a 30% haircut if you buy exactly at the level. So expecting the 200-week moving average to act as support, I think, is generally reasonable, but I do think it's worth at least having making mental space for some sort of wick or move below it, or for price to recover on a closing basis and not on an outright basis. So generally speaking, if this breakdown sticks, prices go down. Where is cheap? I mean, the first structure is around 20, where you've got prior cycles all-time high in the 200-week. I would not be surprised if it pushes lower towards higher time frame candle structure a bit below that. But from a higher time frame kind of investment point of view, DCA, HODL, stack sats type of thing, in general, I think prior cycle all-time high and then previous cycle levels, as I've said in previous videos, kind of 14 to 20k is a decent value area for Bitcoin from a cycle to cycle perspective, right? So if it goes lower, 20k, 14k, thereabouts, if it starts getting really scary, I still think trading last cycle's level is really attractive from an investment point of view, and I'm sure we'll make update videos if things really speed up, but structurally, that's kind of what's below us, so to speak. Now, could this be the bottom? Yes, of course. Is there precedent for that? Somewhat. As we've discussed, the last time the market broke out of this year-long range that we're discussing, nothing happened, and nothing happened was bearish. So in this case, if you have a breakdown and nothing happens, that could be bullish. As I've explained before, I won't spend too long, you had the range high, you had a close above it, price doesn't do anything, back within the range, goes to the other side, right? So on this occasion, you'd want something similar, i.e., yes, price closes below the range, but just like here, it didn't go up. In this case, it won't go down. And then the eventual reclaim of support, i.e., trading back above 35, 37, that would be quite a long, quite a good or quite clear long setup towards at least the mid-range, if not all the way to the range high. So in general, as you'll know from trading intraday charts, lower time frames, if you forget about this and then just focus on lower time frame developments, if you've got a clear level or a key range level which acts as support and then the market breaks it quite clearly, you have two decisions, right? If you want to get long, one is for the breakout to be invalidated by a reclaim of the level, and at that point you long it with your invalidation either on the thrust candle or wherever the deviation or the low took place. So basically the failed breakdown type of long. And your second option is if the market breaks a key support, you expect to be able to buy it cheaper, and then you're targeting lower value areas as a result of the fallout. So it either needs to mitigate or invalidate the breakdown by reclaiming support, or it needs to get cheap enough to punt after the breakdown. Around this monthly close, if it just closes here, could it bounce? Yes. Could it go down? Yes. I mean, my expectation until proven otherwise would be price trading lower. But the reason I make that point isn't to say up and down. It's to say that this middle area where it's not strong enough to reclaim and not cheap enough to be at support, I think in general is not a high conviction area to position. I still think waiting it out at that point is good. And if the higher timeframes are going to be bullish, the monthly time frame would reflect that, just like it reflected the fact that it was bearish at the top in decent time. Sorry. So for example, like an engulfing close the next month back into the range, that would be quite a clear risk-on signal that the breakout has failed. We're still range bound, and accordingly, range midpoint, range high targets make sense. I know it's boring, but if I were talking to my friend at the pub about BTC, all I would say was, listen, mate, it broke down. Looks kind of shit, to be honest. If it gets really cheap, punt it. If the breakdown gets completely absorbed, punt it. But this middle 30k area, it's not too interesting. That's what I would say. And given all of you are my friends at the pub, my digital friends on the other side of the computer, that's kind of what I will share with you as well. It's boring, it requires patience, but patience has been a virtue, as the saying goes, in this market, and I see no reason to move away from that. If you do love to gamble a little bit, or you prefer faster moving setups, gamble is not the right word. Just if you're looking for signals on lower timeframes, as I've said before, this has just been a very one-sided move, and it'd be nice to see at least some evidence of absorption. So if the question is, what's the earliest that you could be bullish? I think it would be a weekly close. And again, there's obviously higher risk associated with that because it's not confirmed, but potentially a higher return or a better risk reward because the setup triggers earlier than the monthly setup. And the earliest version of some sort of absorption or failed breakdown or higher time frame strength emerging would be, as I said, a close back inside the weekly range at about 32, 33k or thereabouts. I know Don has got this entire candle outlined as the range low, which I think makes sense. It's worth paying attention to, but this kind of zone is largely self-explanatory as well. So nothing new setup wise. It would essentially be a weekly version of what we've discussed on the monthly time frame, i.e. if the market closes back within this higher time frame range low, it would suggest that the price action we have now is a failed breakdown, and then there's a move to be made back inside the range. I expect a lot of this selling would be retraced, and at least for me, my eye is drawn back towards this kind of market structure level cluster, closer to the 40k round number, and that's a pretty attractive move to be able to catch, depending obviously on how the reclaim shapes up, how it closes, and so on. But again, notice a theme. The theme is the monthly looks weak, but if it's not weak, it'll go up. The weekly looks weak, but if it's not weak, it'll go up. That's really positive and optimistic, and it's nice to have long setups in the back of your mind. And I don't think there's any case to be made for fresh positioning right here where the market is right now from a higher time frame point of view. But the fact is, none of these levels have been reclaimed yet. Right? Those are counterfactuals, which means price is currently below key levels of support, and we could even see them acting as resistance should we get a rally. So something worth bearing in mind. It's only a few percentage kind of difference to wait for good evidence of absorption versus just buying resistance. And for me, waiting for those few percentage points or for those higher time frame candle closes is worth it, even if the entry isn't as good. It has a chance to prove that it's strong on the monthly, has a chance to prove that it's strong on the weekly. I need at least the weekly to start punting this from like a portfolio reallocation point of view. If we get there, I'll be the first to say, hey guys, this is looking much more positive than it was a couple of weeks ago. I just need some proof. Give me something to work with here, market. Daily time frame, probably the lowest we're going to explore given the weekly show. There's some excitement over this move, and it makes sense. From a range point of view, if we take the lowest close of this entire move down and where the apex of the selling took place, there's a mini kind of failed breakdown here with price poking below the range once again recently, and the last couple of dailies closing above it. That's cool. For you short-term traders, I think the decent range high to pay attention to within this whole kind of rectangle box consolidation, whatever, is at around 31k. Top of the range, overshot, expecting to be resistance again, or at the very least, that's where the range high is. I think if you get a daily close back above 31k, maybe we get a push towards those higher time frame levels and reclaim some of this very one-sided selling that took place when the market broke down, right? Kind of zooming out though, still want to see more strength. Monthly, below support. Weekly, below support. Daily, at the top of the range and just within a consolidation. So higher timeframes definitely still have to prove their worth. If you're wondering about what I'm doing personally, for me, it's very I might gamble on the weekly if it reclaims and looks really good, but it's very likely that my big portfolio decisions, specifically reallocating back into spot BTC and ETH, will be predicated on the monthly setup we talked about. In the absence of that monthly setup, I might pick and poke and prod the market on like a shorter term basis, but that's really the signal I'm waiting for to make meaningful moves. onto ETH USD. The monthly time frame slightly less clear, but I think you can make a similar case that you've got like this consolidation or this range low, whatever you want to call it. The idea that price is breaking down from its cluster, breaking down from its consolidation. And I think you can just make a very, mirror argument. If that closes below, that's a breakdown. Breakdowns are worth taking seriously, and you expect prices to either reclaim the breakdown, which would be positive, or to get cheap enough for you to want to buy it. And this middle point where the market breaks down and you want to act immediately, from a short-term trading point of view, that's great. From a higher time frame portfolio allocation or like key decision making point of view, far less attractive. As far as nuke targets go for ETH USD, looking at this, it's obviously rough, but I think the first kind of trouble area or first structure where value buyers might step in if this really starts to look like a crock of shit, probably around the 1,000 level, which is its prior monthly high. And I think the 200-week boomer moving average lands around there as well. So you've got a nice little pocket there to knife catch any acceleration. In terms of what I think is better support, and it will be a real privilege and luxury to trade at those levels if we get them, although it definitely won't feel like it at the time. It'll be terrifying. I quite like the pre-breakout consolidation sub 1k, specifically, this range, the range low at around 400 and the range low at around 700. That's where we've got like just a lot of candle bodies and a lot of trading done. So for me, if this breakdown is really scary and, the market goes to shit, that's a value area that I would force myself to trade. The only other thing about ETH that I find not too persuasive or slightly unsettling is the fact that we've got this quintuple bottom at 1700. It would be strange if the market macro bottomed while having this as its low. I'd expect either a deeper push or something else. It kind of just reminds me of 6k, and a lot of the time these obvious levels don't make for obvious bottoms. So I'm definitely not going to be rebuying it for a fourth, fifth time or whatever, should the market make its way down there. As far as shorter term trading levels, I think it's a very similar consideration where we know that the monthly is currently below its range low or level of support. So that needs to be fixed in order to get a bullish higher time frame view. And on the weekly time frame, I would also posit that the market is currently below support, because I don't see the 1700 level as being that important from a structural point of view. Most of my structural decisions are made off candle bodies, not candle wicks, especially when this area has been beaten up so much. And for me, the one that catches my eye is this highest close range low level at 1930s or thereabouts. I could see myself longing this if this weekly closes bullishly, which is to say that at the moment it's resistance, right? Because you had support closed below, so expecting this area to be resistance. What you could even do, and the way I eyeball this chart, is just to take this top candle if you wanted to and make a bit of a zone or a box out of it. It's not too long as to be offensive. Kind of makes sense to me structurally. I know Don's got it a bit different, but whatever, very much the same area, same round numbers. And I think if you get a weekly close back above 1935 and above this cluster top, range high, whatever, there's a decent chance that the market backfills a lot of this urgent selling that took place here. And my target from a, I guess, medium-term trade point of view would be some sort of refill of this pre-breakdown consolidation. It doesn't look like much, but depending on where you get your entry and whether you want to position in altcoins as well, there may be a decent mid-term range trade to be had on the weekly if the market wants to play ball. At the moment, as I said, given the close, especially like using the top of this cluster as one of the levels and the bottom of as another one, if you want to do it that way. In any case, I need the market to close above the upper boundary to suggest some sort of strength, some sort of breakout, and then it becomes tradable to fill in some of this dumping. In terms of what's in front of us right now, monthly below support, weekly below support / into resistance. So I still need to see some more evidence. And I think the daily time frame, what we're observing right now, makes that case quite clear that the market is into resistance or below a key level, whatever. You can kind of just see the structure is impulse, consolidation, impulse, and then the market's retesting that consolidation right now, which is what's going on here. So even the daily time frame, if any of these weekly ideas are going to have validity, it has to come and play ball. And at the very least, that would mean reclaiming the breakdown or reclaiming the range low, which is to say, again, the same level around 2K, 1980, whatever. The bearish retest needs to fail, and then the market might become puntable, longable, into this structure as their first trouble area, sitting above these highs, and then into the, again, as I mentioned, retrace some of the selling. Same for it's the same argument as BTC. It's all counterfactuals. Monthly, still below support. Weekly, still below support / into resistance. Daily, whatever, still below support into resistance. Needs to do more. Needs to prove its case a tiny bit more for me to nibble at this. That's really it. I would talk about like macro and altcoins and that type of stuff. I don't find it terribly interesting. I think if you're going to play altcoin bounces, AVAX actually held a key weekly close at this previous range low at 24. So that doesn't look completely awful. This makes for a decent invalidation if you're going to be long altcoins over the course of this week as a way to bet on upside. I mean, market structure's obviously busted, all that type of stuff, but you do see a bit of excess coming in, selling into this weekly level that's sort of been absorbed as the market's back above it. So that's kind of decent. Eye test risk to reward would be whatever. Let's say it's from the level itself, and we're being conservative with market structure. Where have you gone? If your invalidation comes in below the low, even just like a lower high might net 2R or thereabouts, if you have a thesis this week that the market is going to close green or go up or whatever. As I mentioned, for me, quite conservative, still higher time frame trader. I don't have any signals neither on the monthly, nor the weekly, nor the daily, so I would... Personally, I'm not kind of taking part in that, but I can see the case as to why some of my friends are punting sort of AVAX. You see, there seems to be evidence of absorption at some of these key levels, I should say, right? Solana, slightly less clear. Unlike AVAX, it actually closed below its higher time frame support at, where is this? Excuse me, at 47. Not the most clear close in the world, but I'll kind of take it for what it's worth, and it closed back into the range. Usual technical analysis stuff applies here. When the market closes back within the range, in general, you have an expectation that it's going to trade to the midpoint or to the other side. The midpoint cluster comes out somewhere in the 30s. iTest says hereabouts, thereabouts at 33, with the range low at 25. So if I want to be bid Solana, it has to either close the week and be accepted back above 47, in which case there's a case to be made towards retracing a lot of this selling into into daily / weekly structure at 70, 80 or thereabouts. So basically it needs to invalidate the last weekly close and close above 47, and then I can say, okay, this was just oversold and it's back above the range and there's a trade to be made there, or it needs to mega puke into support to be attractive. As for what we have right now, what's in front of us, it looks like a close back into the range. I can't blindly long that. It needs to either invalidate by being strong or invalidate by, getting cheap. I think that's really the core message I've got, is waiting for crypto bears to be invalidated. Invalidated by being strong, breakdowns not sticking, invalidated by prices reaching value, becoming cheap, moving from one high time frame area to the next high time frame support. That's really all I think I could leave you with, and certainly it's my framework. I'm waiting for crypto bears to be invalidated. There are two forms they're invalidated. The market is strong, and for a change, one of these breakdowns doesn't work, and they've sold the bottom, and you've got strength coming in to soak up that selling, and you expect higher prices, or invalidated by prices reaching value, becoming cheap, and moving from this one high time frame area to the next one, where there may be value or some sort of bounce to be had. Hopefully that's clear for what it is for BTC and ETH and some of the altcoins. Honestly, I don't give a shit. I know that sounds ridiculous and facetious, but again, for me personally, being completely upfront, I have a lot of stable coins. I'm waiting for high time frame strength so I can shove those stable coins into BTC and ETH. And then if I get clearer setups down the line on altcoins, then I will trickle out further on the risk curve. I really care about getting BTC and ETH right. I'm less interested in day trading or even medium term trading a lot of these altcoin positions. Just me being completely upfront and transparent with you. That's really all I've got for the time being. I still think from a market structure and a market cycle point of view, it's a period of time that's worth paying attention to the majors. That is to say BTC and ETH. That's my focus. And history suggests that the best altcoin plays are to be made well after Bitcoin and ETH have bottomed. So it's in terms of regime or where you want to spend your efforts, I think the majors really warrant them and dictate kind of how a portfolio is weighed. And we can worry about catching the next Solana, AVAX, Axie when the market looks better. That's all I've got. Bit of a frank one. Hopefully you enjoy the enjoy the honesty. You know, I'm not going to talk about stuff I know nothing about or stuff I'm not doing. I'll always keep it 100 with you, as the kids say. That's all from me. Take care. Thank you again to the FTX app for supporting the show. Get the mobile app after listening to me talk about it because it's the best mobile trading app experience on the market. Track your portfolio, hide your portfolio, buy shitcoins for your family. I might DCA some Solana for my sister after shilling her the top. That's not true. She like 50x'd and then didn't sell any. Fair enough. I told her not to touch it. But it's a good way to get your family into the cryptographic Ponzi schemes. And you can see that's going really well for everyone. Take care. Like, subscribe, all the YouTube stuff. We do check. It does make a big difference. We are grateful for your support. Enough babbling. Have an awesome week. See you soon. Bye-bye.